Hey guys, it's Eric with Low VA Rates coming to you today with some VA loan tips. And some of these tips can be for non-VA loans, but I love focusing on our veterans here. The tip today is improve your credit score to get yourself a better interest rate. Now, I don't know how many times people wait until the very last minute to start taking their credit score seriously, but it happens often, and it really shouldn't. So if there's one thing that I want you to get out of this tip video today, it's take your credit score seriously now, start the process of improving it now, then you can review it before you buy a house, you can monitor it along the way, and do everything you possibly can to get the best score out there. That's because even though VA loans don't have a minimum credit score requirement, the score still will have an impact on your interest rate and on the loan you get. Here's how that works. Lenders, like Low VA Rates, will always look at your score along with your credit history as part of your loan application and approval process. And the VA requires that we make sure that you have a satisfactory credit risk, which your score and your history helps us determine. Some lenders actually set their own internal credit requirements, which we refer to as overlays here at Low VA Rates. For example, even though the VA has no minimum credit score requirement, some lenders may say if you don't have a 680 score, don't even apply with us. That's an overlay. But even if lenders don't have a set minimum score or overlay, they are still going to use that score to determine what interest rate you're going to qualify for. Let me give you a little secret. As a bank, as a lender, we're going to give a better interest rate to somebody with a better credit score because there's less risk involved there. We can offset the risk of somebody with a lower credit score by giving them a higher interest rate and making more money. That's just how it works. So in some cases, your credit score might even disqualify you from getting a loan, not because it's too low, but maybe the interest rate that comes with that credit score has to be just a little bit higher because of the risk that you carry, and that now knocks your debt to income ratio or your residual income right out of whack, and you can't get the loan. Now you might say, well, then why doesn't the lender give me a little bit lower interest rate? Well, because your credit score is too risky, and there's this predicament there. Again, the tip today is get your credit score up before you start going out and shopping for a new mortgage or buying a home. We actually just published a video on this topic that you can find down in the description box below. Just click on the link, it'll take you right to it. But the most important thing that you're taking from this video, if you're paying attention, get started now. Even if you're not gonna buy a home for a couple of years, you're waiting for home prices to come down, you should be working your credit score now.